The bullish reversal in the dollar index is now confirmed. That means that in the coming days to weeks, we should be expecting a bullish DXY. And you know, that will affect currency pairs like the EURUSD, the Gbpusd, and also gold and oil. So in this video, I'm going to show you how to trade the DXY, EURUSD, Gbpusd, and gold in the coming days. So that is exactly what we are going to be looking at in this very video. So just stay back and enjoy the video. All right, so if you're new to my channel, this is Mobile Trading Academy, where we simplify forex trading, helping traders become profitable in the forex market. So if you haven't subscribed to my channel, kindly hit that subscribe button and turn on your notification bell so you don't miss out when I release my next videos. So this is the DXY chart on the daily time frame. Okay, so all the while we've been tracking these very channels, and when we got this bounce from this place, I was expecting a deeper move back below this very channel bottom because of what I was seeing in the weekly time frame. So I will start with that and then proceed to the lower time frame, to 4 hours time frame. Okay, so here was the weekly time frame. I was telling us that I expected price to hit the bottom of this very channel before moving up, but like we can see right now, we didn't get that very move to the bottom of the channel, and that is forex. So the market does what it really wants. All right, however, on the daily time frame, we got that symmetry completed. So here is it on the daily time frame. We got the symmetry completed. The market came down to touch the bottom of the channel. Since then, we've seen a bounce off from the bottom of the channel. We also see the market reclaim this very channel bottom right here. Okay, but something is very obvious now. We're seeing a reversal pattern here, which is confirming that the bulls are now in charge, and this reversal pattern is called inverse head and shoulder pattern. This inverse head and shoulder pattern is a confirmation that DXY will be moving up to a higher height. In fact, the height of this inverse head and shoulder will be to this very point. Okay, this is the left shoulder, this is the head, and this is the right shoulder. Here is the neck region. Now let's get to the 4 hours time frame so that you will see exactly what to expect. So here is the 4 hours time frame chart of the DXY. Like I was pointing out on the daily time frame, that we have an inverse head and shoulder pattern, and we can see very clearly here. So this is the inverse head and shoulder pattern. All right, it's the left shoulder, this is the head, and this is the right shoulder. So this is the neck region. All right, so the price broke the neck region at this point. Then we got a retest of the neck region here, and price is expected to move up to the equivalent height of this very pattern. So there are ways you can measure the height of this very pattern, and I'll show you exactly how I measure mine. So some people will just take the height from this point. So maybe they'll just pick their crosshair, then they come to the center here. So from this point to the low, so they pick it from this very point to the lowest part of this very head structure. Okay, so in this case we are seeing 2.840 points. Okay, that is what you will measure from this very point. So that will be around 102.04. So this would be the height. Okay, so that is how some people measure theirs, but this is how I measure my own. To measure the height of my pattern, I begin with the beginning of the pattern. Okay, here is the beginning of the pattern where the neck region started. All right, I'll start from there to the bottom of the head, from here to the low, which is the bottom of the head. All right, so that is what I measure, and this will give me 3.457 points, right? So I will now go to the point where the market broke the neck region, where we got that confirmed break of the neck region to the upside. I'll measure 3.457 from that very point. Okay, so here is where the market broke the neck region to the upside. So I will now measure 3.457 from there. So you can see when we measure 4.357 from this very point of break, we are seeing the value right at 102. So here is the 3.457 and the value at that point is 102.284. So that would be the height of this very pattern, and that is how I marked out this very point 102.284 as our destination. That is where this DXY will be going to. So now that you know where the DXY is coming to, right, we are heading to this point. The question is, how do you trade it? Are you going to start buying from this very point? That would be a very wrong move to take. So the best way to trade inverse head and shoulder like this is to allow for price to retest. Though price has retested this very neck region, but you need to allow price to give you a good pullback to retest this very area. We still have few imbalances right here, so we may see the DXY plunge back into these very areas, okay, to retest this zone, and then any buy opportunity from this very area to the upside with your stop loss just below this region will give you a good risk reward ratio. So it will be good to allow price to return to this very area, retest this very zone, then taking a long position from anywhere around here with stop loss just below this very right shoulder will offer us a better risk reward ratio. So now let's get to the GBP/USD and see what to expect. So here is the GBP/USD on the 4 hours time frame, and we're seeing a confirmed head and shoulder pattern, which is an inverse of what we're seeing in the DXY. You can see how the DXY affects GBP/USD and the EURUSD. So right here is the left shoulder, this is the head, and this is the right shoulder. This is the neck region that has been broken. All right, and it was retested here just like we saw in the DXY and we saw the sell-off. So we can see it from the highest point here to the neck region here, we're having about 417 pips, okay? That is what we're having, 417.6 pips. So in that case, you measure that's equal distance from the neck region to the downside. So that will show you the exact target that we are heading to. So when we do that, so we have 417 pips. All right, so you can see this is 417 pips from the neck region, okay? And that price will be at 1.295 price level. That would be the target. So that was why I marked out this area as my target on this very chart. So we are having a confirmed bearish reversal on the GBP/USD. So the question now is, how are you going to be trading it? If you jump in from here and start selling from here, then you have a greater risk because your stop loss will be somewhere over here. So the best would be to allow price to retest this very area, okay? Then begin to look for short opportunities from this very area, from this zone, okay? Then you short the price down to where we have identified our target. So as our target, and our target is 1.2951. That would be the target. So in the EURUSD, what we're seeing is a double top instead of a head and shoulder like we're seeing on the GBP/USD. So we're seeing a double top with our neck region right here. So this is the neck region, okay? So we're seeing a double top, which is also a bearish reversal pattern. Initially, I was telling us all the while that based on what I was seeing on the weekly time frame of the DXY, I was telling us that we may still get the EURUSD come back to this very 1.2081 area. Also based on the imbalance I was showing us on the daily time frame of this EURUSD. But you know, the market does what it loves to do, and that is why we have to just follow the price. That is why I love price action. You just follow what the market is showing you. You don't struggle with the market. So now we are not getting that 1.2081 again, like I said initially, but we are seeing a confirmed a bearish reversal, at least for the moment. So the question is, where are we targeting? So let me show you exactly where we should be targeting. So let us measure exactly where we'll be targeting. In this case, our neck region is right here. Okay, this is the neck region. From the top of the head to the bottom, okay, to the neck region, we're having about 273.4 pips. Okay, so this is exactly the number of pips we're going to measure to the downside. We're going to take it from the point of break because of the slanted neck region. So here is 273 pips to the downside. That means the price will be coming to 1.1265 price level. That would be the initial target. We could get further move to the downside, but that will be the exact target that we'll be heading to. I've marked out the expected target as this. Okay, like we said on the GBPUSD, it's not ideal to start shorting from here. Despite the fact that we know we're coming to this point, it's not ideal to short from the price right now, because that will not give you a good risk reward ratio. So the best thing is to allow price to retest this area, because you can see that there is imbalance around this area. We didn't get a retest of this very point and we have imbalances here. So a better trade will even be to see price come back into this area, then you short from here. So that is for Euro USD. And should I touch gold? The video is already long, but let me see if we can look at gold. So finally, let us look at gold. With what is happening on the DXY, let's look at gold. So here is gold on the 4 hours time frame chart. When we look at the recent price action, we saw that we had this fake out above this very channel top here. Okay, so with this fake out, is expected, all things being equal, that gold will move down to the bottom of this very channel, because a fake out in one direction of a channel will lead to an extended move to the opposite direction of the channel. Just like what we had here, we had a fake out below this very channel bottom. We saw price move back to the top of the channel. We can see this ascending channel as the bottom of the ascending channel held gold back at this point. So the question will be, how do you trade gold right now? So first, we must establish that gold is heading down to this point because of this fake out we had at this area. But we need to see gold close below this very channel bottom and also below this very key level for price to open up to this area. Okay, so this is the immediate support that we're having. This and this is the immediate support that gold has to conquer. However, if we see gold begin to close back above this point, okay, then we may see gold get moving up to these very levels again. So if you got value from the video, I want you to like the video, hit that subscribe button, turn on your notification bell so you don't miss out when I release my next videos. And remember, check out my mobile trading accelerator course and you will not regret getting the course.